How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. We're going to be going over my top 4 stocks that we're watching for this week for earnings. As we can see on our screen right here, we have a bunch of companies reporting earnings. We have stuff like Johnson & Johnson, Procter & Gamble, Netflix. We have Verizon, Tesla. We have IBM, AT&T, Snapchat, Intel, Chipotle, Southwest, Honeywell, American Express. Tons and tons of companies are reporting earnings this week, but I scanned through all of these and I chose 4 that I'm really going to be watching for next week, as well as some potential plays that we're going to be going over in this video. So the first stock we're going to be going over is going to be Snapchat, which has earnings Thursday after the market closes. So it's kind of towards the end of the week. As we can see, Snapchat right here, $77.50 per share. If you take a look at the 1-year chart, it's been doing pretty good. Nice and steady uptrend. Very, very healthy. And overall, it's been doing pretty amazing since a lot of people are definitely looking towards Snapchat for earnings this week. A lot of new users happen to flock to Snapchat during the pandemic, and overall they have been upgrading their technology to tailor more towards advertisers, so they're getting a lot of revenue for that way. So what we're going to be doing is we're going to be selling some cash cleared puts on Snapchat. Take a look at the charts here. Really good support around the $70 price point. So we're going to be heading over to the options chain, and the good thing about Snapchat is there's some pretty good premiums on these contracts. So people are thinking that it's going to be a pretty volatile move for earnings, but I wouldn't mind owning Snapchat at, say, $70 per share. $69 would be pretty good, right under that $70 support. And you're going to be collecting a lot of premium, as you can see here, $114 that you're going to be collecting as credit. So as long as Snapchat stays above $69 at expiration, which is the end of the week, you're going to be collecting your credit in full. Now, if Snapchat happens to drop below your strike at expiration, you have to own 100 shares of Snapchat at $69 each, which is a pretty significant drop in price. And you're going to be owning shares of Snapchat at a really good dip buying opportunity here. If you want, you can go even lower, maybe like a 68, but I'm looking at the 69 strike. It looks pretty good. And even if Snapchat drops from earnings, you can still make money due to the implied volatility crush. As we can see, implied volatility is pretty high, so premium is going to be pretty high as well. So next up on our list is going to be Intel, which actually reports earnings the same as Snapchat after the market closes on Thursday. And Intel is pretty interesting. It's been pretty shaky, but overall it's been pretty stable the last few months, as you can see here. Not really much movement, and Intel is a solid company, a very recognizable brand, and a lot of people use Intel products. So what we're going to be doing is we're going to be selling some cash cleared puts as well. I'm looking at this $52 strike at expiring this week. 80% chance of profit, collecting just under 1% for the week, which isn't that bad. So that's going to be our play for Intel. And next up on our list is going to be Southwest Airlines, which has had quite a bit of a pullback from its 52-week highs of almost $65. So we're sitting $15 under the current 52-week high. So really good opportunity, as you can see here. It's been pulling back. But overall, we do think that Southwest Airlines is going to be pretty good for the long term, especially as people start to travel more. So you could just buy and hold shares, or you can play options as well if you want to get the stock at a cheaper price. Because there's not much premium, so you could do a $49 strike expiring this week, or head over to the next week and do like a $48 strike. That would be pretty good as well. But overall, LUV, Southwest Airlines, I think is a good dip buying opportunity right here. And it is a dividend paying stock, even though they don't pay much as well. Intel, also a pretty good dividend stock as well, 2.52%, pretty solid dividend. So even though Intel hasn't been moving much, you're still going to be collecting those quarterly dividends, which is pretty nice as well. So last stock on our list is going to be AT&T, which reports earnings Thursday before the market opens. And we're sitting at a pretty low price point of $25 per share. As we can see, past year it is down. It's been slowly trickling down, and it is going. It's pretty much at all-time low levels. So it's a very good buying opportunity, in my opinion. Just buying and holding shares. It's a solid dividend stock. They pay a really high dividend of 8.09%. So even though the stock isn't moving much, you're still going to be making money collecting those dividends from this very big dividend aristocrat. So if you want to buy the stock even cheaper, you can try and do like a $25 cash secured put and trying to get assigned shares at $25 each. That would be a pretty solid strategy. So we haven't covered a lot of stocks like Tesla, Netflix, Chipotle, just because those stocks have pretty high price points, not really feasible to sell options. I am selling a cash gear put on Tesla, and that's doing pretty well, but a lot of people just don't have the capital to sell puts on these higher end stocks. So if you want, you could do like call credit spreads, put credit spreads. We will make a separate video on how to do that if you want. Leave a comment down below if you're interested in that. But Tesla, it's going to be pretty volatile. And overall, Netflix should be doing pretty good as well. But of course, during earnings season, you always got to be careful buying options because implied volatility is going to be high, meaning the premiums are going to factor in a pretty big move. So if the stock if the stock happens to not move a lot, you're going to be losing money on those options, which is why I like selling options during earnings season, and it's been doing pretty good for me. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on earnings this week, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.